Good evening, everyone. Thank you for being there at the Cometh headquarters for this RWA meetup. I'm pleased to welcome some experts tonight, and they will present themselves after. Just before a short introduction, as everyone knows here, there is a great context to do a meetup in this moment because, of course, there is the beginning of potential future bull run. Everyone is talking about the Bitcoin price and so on. Of course, people are also talking about Solana and other new elan that are having more and more traction. Few metrics about RWA. Last year, during the bear market, CoinGecko estimated the total value of RWA assets about $2 billion. And I was on Google just before the meetup to see the updated numbers, and apparently we are about $6 billion of real world asset tokenized today. So it was tripled with just the beginning of the bull run. So before we start, maybe each of you can introduce itself and just present his company, his path, and so on.
Yeah. Thank you very much. So I'm Oscar Dumant. I'm the co-founder and CEO at Dowgo. I have a financial background. I was a fund manager at HSBC in Paris. I was also an analyst in private equity. So I know quite the listed asset and non-listed asset investment background. So at Dowgo, we are doing tokenization of renewable energy parks, winds and solar parks. And we are bringing a platform for renewable energy project to get refinance through tokenization directly with professional investors. And it's a way for smaller projects ranging from 1 million to 10 million euro to get finance easily. Because today the demand for renewable energy all around the globe is very huge. And smaller assets have difficulties to get funded because big funds in private equity in listed companies won't invest in assets under 10 million in value, and we bring a platform for them to get finance very straightforward with the professional investors, and yes, that's our platform, Dowgo.
Hi everyone, so my name is Luc Falempin. I'm the CEO at Tokeny. So we are a technology provider. We do tokenization for almost 7 years now. We now work mostly with financial institutions like banks, asset managers, exchanges, fund admin to tokenize assets in a compliant way. So we basically provide the issuance, the management, the transfer of all of these assets. So we have done a lot of stuff over the years, a lot of different technology bricks, and now we are very happy to see that it's the right market timing.
Thanks. Good evening. So my name is Eli Cohen, or maybe Eli Cohen for tonight, as you wish. So I'm the general counsel at Centrifuge. I'm also chief compliance officer for a tokenized liquid treasury fund called Anemoy. I've been in crypto for a little while. Before this, I was at Block One out in Hong Kong, building a CeFi exchange called Bullish, and then I was in various TradFi financial market structures at Singapore Exchange, Chicago Mercantile Exchange, at Euroclear Bank in Brussels, so a few different things. And then Centrifuge is, to intro, it's a tokenization, securitization platform. We've launched our first pools in 2021. We've got a number of different kinds of debt offerings through the pools, and now we have a first fund offering as well. So mostly private credit, some trade receivables, some types of real estate deals that are also tokenized, and then we have our tokenized treasury fund.
Very impressive. Okay, very nice to have you as experts tonight to talk about RWA. The first question is for you, Eli.
Yeah.
Well, You know, during the DeFi summer in 2020, where the word trendy was tokenization. During the second bull run in 2021, everybody was talking about NFTs, and now we are talking about RWA. So my question is this one: is it just a simple rebranding, or does things deeply change in the ecosystem?
It's a good question. We have a lot of discussions internally about RWA and the term RWA. What does it mean? Should we even be using it? It meant something very different in 2021. In 2021, it really meant real estate. It meant receivables. It meant things that were sort of off-chain assets made into the on-chain markets through debt instruments like securitizations. Then they kind of morphed a bit into things that included public securities. You know, there were projects like Backed and Ondo that had exchange-traded funds that they tokenized, and then they morphed even further into the U.S. Treasuries and other types of things that you might not even consider to be really real world at all. Stable coins sometimes are now calling themselves RWA projects. So it's hard to know exactly what that means. You know, we would like to have kept it in a more compact manner and like to have branded it a little bit more ourselves, but if the market does what it does, it's crypto, right?
Do not hesitate to add anything if you want. The second question is for you, Luc. Eli talked about the market context, about the economy, and what drive people to talk about RWA now. Regarding technical improvements, we recently talked about the ERC 3643. I think you are a board member of an association that promote this standard. Can you tell us more about this standard?
Yeah, sure. So we started Tokeny years ago, and we were looking for a standard. At the time, we are a very small company. We didn't want to invest that much in smart contracts development, to be honest. We started to use what was there, ERC20, ERC 1400, and a few other stuff. And over the years, we've built our own tech stack. So then last year, we were like, okay, we have all of this. It's a version 4 of everything we've deployed already. We have clients for years. We've faced a lot of challenges. So it's probably time to go on the market and assume that we have built a standard. So we pushed it to become a real ERC. It's actually a full suite of smart contracts. Everything is open source. So you have the token itself and all of the other compliant smart contracts around. So it's quite complete. Even a factory. So in one blockchain transaction, you push the whole thing. So we created this non-profit association. So Tokeny is the original creator of this standard, but now the association is something else, another legal entity. Tokeny is just a member. So we created this association, and the idea was to bring everybody around the same table. So now we have like 15 tokenization platforms. We have global law firms. We have fund admins, other type of financial institutions. We have blockchain networks, and we all collaborate to build what should be tokenization. So the idea is to use a common foundation, common grounds, to not reinvent the wheel all the time. And from this, which is very concrete, it's smart contracts with functions and features. Based on this, we build step by step. So we have already created a lot of things like a DApp to deploy tokens easily, like front-end components for DeFi protocols, different papers for the legal side. So all of us, we are working together to make it happen, because there is no competition for the moment. We just try to start this market for real.
Nice. Maybe you can drop some names of other members from.
Yeah, sure. So on the financial institution side, we have players like Invesco, which is one of the major asset managers, or Apex, probably one of the largest or the largest fund admin, with $3 trillion of assets under administration. We have global law firms like CMS, Allen & Overy, DLA Paper. We have Polygon, Clayton. We have Ledger. We have so many, and Chainlink as well.
So to complete the previous answer of Eli, we can say that there is a shift also on the technical plan, and it's not just a simple rebranding at the end.
Yes, because it's just the smart contract layers. So that anyway, visible. And it's not where we see the value. What we do at Tokeny is a software on top of this to make it easy, no code. So anyone at a bank or an asset manager can use our tools and the standard and barely see the blockchain, just can leverage the benefits of blockchain. So you can use the standards without Tokeny. It's just much simpler and much faster with Tokeny or with other tokenization platform. So now finally, and I think it's only for 18 to 24 months, that we finally have all of the bricks needed to take a project from A to Z and to say, okay, it's an alternative to traditional finance.
Okay, very clear. Third question for you, Oscar. When it comes to RWA, people think about real estate, think about stablecoin. Regarding the underlying assets, may you can shed the light on the real possibilities in this area. Which asset could be tokenized now on the blockchain?
Yeah, first it's good to be on the stage with Tokeny because we also use their standard. We developed for the past 2 years in tokenization, and we developed our own smart contracts first. It was running and it was okay, and we built it from scratch. But we need a standard. We need a way where everyone is going on the same direction, and it's very important to have something for the whole community. So we decided to go on the ERC20 3643.
It's a red one, that's why it's a tribal name.
And so we are very glad to have take this step. For the question on RWA today, it's very small for sure, but for me, our first protocol was tokenization of assets that are listed on public exchange, because for us we wanted to put on chain assets that are trusty, that you can confirm that when you invest in it, you are really investor on these assets. So we decided to go first on public asset, because when you invest in it, you are publicly a shareholder of these shares. And then we built a second protocol that is more disruptive for us. So it's a tokenization of assets that are not accessible today easily, private assets, to bring full liquidity and public fund to any kind of asset, to bring funding to smaller assets. So today we are funding renewable energy farms that get difficulties to get funded, and we take the benefit of public blockchain to full traceability of this asset. So in public market, what is working very well is that every 3 months you get the quarterly reporting, so you know exactly what is going on the asset, and we are replicating this reporting and this transparency by issuing an IBAN, a private IBAN for each and every asset that is going public on Dowgo. So it's an IBAN published with Monerium. I don't know if you know this company. It's registered in Europe as electronic money. So when we work for tokenization of renewable energy assets, we work in euro, only in euro, but each euro that is incoming in the asset is directly transformed in stablecoin, euro stablecoin. So now it's traceable for all the investors, and we are bringing the full transparency and this auditability that was permissioned in the listed and public market for any kind of asset. So for me, tokenization and RWA will be liberation and allow any asset to get funded like listed companies.
Okay.
But I don't know if I respond to the question exactly.
The question it was more in general, which kind of assets could we find under RWA? Because you talked about renewable energy, you talked about financial assets, but which class of asset do you see in this ecosystem?
Yeah, for me, the market is very small today, and it will grow every year for sure. But today, the first step was to tokenize the value. Yes, so we see stable coins. It's because we need something to exchange value, and we need a coin to do that. So it was the first step to tokenize stable coin, I think. And for what I saw today, the market is pretty mature for debt issuance, not yet for equity. It's a bit complicated today for equity, but I think the debt market will be the next one to be tokenized.
Okay, very interesting. You want to add something? Yeah.
You just to add to that, we definitely agree. The debt market, I think, I mean, the funds market and the debt market, I think, is where we think the growth is going to be. It's still very small compared to the TradFi world. I mean, you've got a lot of tokenized U.S. Treasuries, but there's lots of other debt products. You know, AAA credit, private corporate credit. There's a lot of sovereign debt outside the United States, and I think as the market shifts, we're going to see more and more tokenization of Japanese government bonds or OATS in France, lots of different kinds of sovereign bonds. There'll be more demand for it. The more there'll be stable coins denominated in other currencies besides USD. They'll need that kind of backing. So I think that's what we're expecting.
Okay, great. Yes, next question is for Luc. You define your society as a tech provider. Generally speaking, Web3 is facing a lot of onboarding issues. I mean, wallet, gas fee, and so on. Just would you say that you also inherit from all of these issues with RWA? And in addition, do you have any specific issues linked to RWA today?
Yes, because what we do is security tokens mostly, also some payment systems, but mostly security tokens. So it works basically totally differently than crypto. In our smart contract, there is a recovery feature. So it's a centralized issuance on a decentralized infrastructure. But you have a fund admin, for example, a custodian, who can technically take the tokens from your wallet and send them somewhere else. Potentially to another of your wallet, or take them back, or force transfer, or whatever. So it's really different than crypto. And what we've seen over the years is that the type of investors onboarding on our platforms are bigger and bigger. So it's mostly actually institutionals. And they have no clue what's a wallet. They have no clue what is gas fees, and they don't really care, to be honest. They just want that when they click, it works. I want to transfer, boom, okay, it works. No counterparty risk, okay, I believe you. So we had to hide all of this complexity. And that's why actually we are very advanced, technically speaking, and that's why most of the banks will try to build stuff for the last few years, didn't really succeed. So we started from public blockchains, and we brought compliance and control on public blockchains. So it forced us to do a lot of things, a lot of websites with good UX, and to abstract all of this. So you can still connect your wallet as an investor. If you don't have one, we generate a non-custodial wallet for you. You don't need to worry about the gas fees because anyway we loaded your wallet. So all of these things are really really important for adoption. But what is hard is to hide all of this complexity of blockchain without hiding the interoperability of blockchain. Because what we do is not we are helping digital asset marketplaces to be on a ledger with other people. That's the idea. It's not to replicate the silos of finance. It's to put everybody on the same infrastructure. So we need to keep things interoperable with any ERC20 wallet, with any DeFi protocols, etc. So we choose the EVM stack. So it's not all blockchains, but at least it's a big part of them. And we try to build on top. So the smart contracts to make sure it's open and clear. And on top of these, or APIs or software, that is really no code. You can deploy a token without any technical knowledge.
Very interesting. Anything to add or about friction and adoption? No? Well, just a precise question. You were talking about institutional. What is the main aspect they are sensitive to? I mean, when you're talking about onboarding, you say they don't care about the wallet, they don't care about the gas fee. So what do they care about?
So they have compliance rules to enforce. So they have to verify their investors. So all of the KYC processes, documents to sign, that kind of things. The audit trail is very important. So actually, where the blockchain is useful. So they care about the same things they care in traditional finance. So just they want everything digital and in real time and working well. So that's what we try to build.
Thank you for the transition, because the next question is about compliance and regulation for Eli. We are talking about bull run on 2024 like a promiseful year, but it's also the year of regulation, because MiCA is tomorrow, and other regulation, especially in France in the gaming industry, will arrive in next month. So Eli, you are director of the compliance at Centrifuge. What are the regulatory challenge in your company, and who are the involved regulators in your landscape?
So it's a great question. I won't talk all night about this, but it's I think in RWA we're in a little bit of a different space than a lot of the things that you read. So a lot of the issues for most of the kinds of protocols in crypto are our token securities, or are they not securities? But as with Tokeny, everything on our platform are securities tokens. They're issued that way. They're issued under various different exemptions, or they're registered for the funds offering. And so we don't have to face the one question that a lot of people face is our token a security or not a security? So that's helpful. It doesn't mean that there's no regulatory issues, but it is helpful from a compliance standpoint. It's helpful when you talk to the institutions, because you can explain that to them, and you can explain what you're doing in terms they understand, which is very helpful. And it's also very helpful from a risk standpoint. When you're explaining risk to potential investors, you can explain that the regulatory risk that you face in an RWA protocol is very different than if you're in a DeFi yield protocol, right? Because there's always a risk when you're in a DeFi yield or some other kinds of investments in the crypto space that a regulator will come along and shut it down or put your wallet on a sanctions list. There's a lot of things that can happen which could really impact your investments in a very negative way. But with the RWA protocols, it's in a very different space, and it's in a much more robust regulatory framework behind it, one that's been tried and tested, and it's very unlikely that there's a lot of regulatory risk. So for our business, we feel pretty comfortable, but the market as a whole, as you say, has a lot of changes coming to it. In Europe, MiCA obviously is the main thing, and for us, certainly the stablecoin provisions in the MiCA will be really important to be following very closely. That's something that I'm following very closely, because everything in the market depends on the stablecoins, right? So you've got some stablecoins. We've moved from DAI in our first pools to USDC in our current pools, and part of that was because of regulatory issues and the potential of what MiCA is going to do with a product like DAI, right? So or Gnosis or Aave, right, for example. So a lot of the decentralized stablecoins are going to have a lot of thinking to do, and a lot of work to do. We'll have to see sort of where the regulators go with that. In Europe, it's still a little bit opaque, I think. In the US, the big thing I think this year is going to be whether the SEC and how much they fight the ETFs, the ETH ETFs. We saw a year-long process with the BTC spot ETFs, which came to a conclusion finally in January with a great effect on the market. And the ETH ETFs have probably a potential to do even more for the market should they get launched. The SEC obviously is going to do everything that they can think of to avoid that. And they've got a few cards that seem to be playing right now about whether they may consider preemptively ETH to be a security. That would be a big issue. Obviously, that's going to go to a court in the US, and it could tie things up for quite some time. So that's really what we're focusing on in the US. And of course, we have an election that you may have heard about. And so we'll see whether the Democratic, I think Gensler's going to be gone either way. He doesn't usually stick around very long. He's already overstayed his welcome. So there's going to be changes no matter what happens in the election, and almost certainly changes for the better for crypto, because it could not get any worse than Gary Gensler. So that some summary of where we are from a regulatory standpoint.
Okay. And I guess you discuss with the regulators directly. And would you say that they are quite neutral, aggressive? Because in France, for instance, some people, like mostly the exchange, say that the AMF, so the French regulator, is quite very aggressive concerning all the subject of exchange. I discussed with them because I am also leading the compliance strategy of Cometh, and I found that the AMF is very neutral and they do very well their job. Would you say that the regulator you are talking to are quite neutral or aggressive on crypto? What is your...
I mean, we try not to talk to the ones that are very aggressive, so we don't talk to the SEC, of course. We don't really want to be on their radar. So we've mostly been doing work in offshore jurisdictions. So we've talked to regulators in Cayman. We've talked to regulators in BVI. I was this week in Gibraltar talking to the regulators there. So there's a number. I think those regulators obviously have a very big stake in making crypto work in their jurisdictions, the offshore jurisdictions. We've had some meetings with the BaFin, which were a little bit different, I would say. And then we've had a number of meetings with regulators out in APAC. And I've got some meetings set up around Dubai 2049 with the Middle Eastern regulators, which I have not spoken to yet, but I'm very interested to see what their views are. So a whole mix.
Yeah.
Maybe I can comment quickly, because for 6 years we met a lot of regulators trying to explain what we can do, and that it's not only crypto, it's also blockchain stuff, and you can control, you can enforce compliance. And we started with Luxembourg, because we are headquartered in Luxembourg, so it's Europe. And it's a big place for finance, and they were totally fine when we explained how we will enforce compliance and who is doing what. And then it helped us basically to go to see all regulators around the world. Now we do it with the association, which is even better. So we don't risk to say, okay, well, what we do is not the question. It's like, it's a set of smart contracts. If people use it, and we know exactly who is doing what in the value chain, are you fine with that? And usually it works. So recently the BaFin, the SEC, actually it's very soon, it's coming. We contacted them. In Europe it's totally fine. We found regulators very open, to be honest, for years. Now with MiCA it's complicated for them to do their job, because I don't know how you can issue a utility token under MiCA, to be honest. And apply the VAT and the rules and stuff. But for security tokens, it's very clear. It's securities regulations. Boom. In some jurisdictions, like in Singapore, for a long time, it was a bit not clear if it's tokenized. Does it change the fundamentals of the underlying asset or not? Hong Kong just said it's not because you tokenize that it changed the nature of the asset. Okay, fine, that's the only thing we needed. So step by step is going in that direction. So for securities, it's becoming easier and easier. For crypto, I think it's becoming more and more complicated. And recently, USDT, Tether, they just say, yeah, Europe, we don't care. We will not comply with MiCA. So they would just disappear from the centralized exchanges. Not sure the users of USDT are really the users of centralized exchanges anyway. So
yeah, if we talk about regulation, it's because there is adoption, and if there is adoption, it's because blockchain is solving apparently some problems. This question is for you, Oscar. 2024 is a good year also for ESG and CSRD. And sustainable finance in general. Past attempts have failed, like the pollution right markets, a few years ago. Taking the specific case of Dowgo, your company, how would you say that RWA solves a problem that traditional finance technology didn't solve previous year?
Yeah, sustainable finance and ESG, it's a very big name in banking industry. They have it everywhere, and they don't know how to put it on their investment vehicles. And it's a big problem for the past, I think, 10 years. There is a lot of greenwashing. So when they are selling a green bond, you know that the thesis is to be green, but you never know what is inside. it's not transparent. Blockchain is the main benefit for blockchain is to be transparent and to track very deeply exactly what it's investing in, what it's doing, and you can also track some data. ESG, it's really some to put so environmental, social, and governmental data and extra financial data within the vehicle, the investment vehicle. And I think tokens and blockchain are very well fitted for this. So to a token, you have the value and you also have the data and you know exactly what it's investing in. And you have to go back on the carbon credit market. I think a lot of projects try to do carbon credit. Maybe it will come with one big player and one winner. I don't know, but for us, it's we track ground guarantee of origination. It's the green certificate from renewable energy production, and this can be tracked easily with the token, and it's an extra financial performance for investors. And this can be tokens are very well fitted for this use case, for example.
And in the field of sustainable finance, how would you define briefly the mission of the Dowgo in few words?
Our mission?
Yeah.
Our mission is really to get a lot of funds to renewable energy. There is a huge need. We need to invest 2 trillion per year until 2030 globally. And I think every investors want to invest in this transition, but the lack of transparency and for direct direct vehicles to invest in it, I think blockchain is very well fitted for sure. And regulation come at the right time. As you mentioned, I think we are in a very good timing because in traditional finance, compliance is middle office, back office. It's the biggest part of finance and investing. So regulation within the crypto industry is good for us in the RWA because I think it's going to make this market much deeper and accessible.
Okay. Anything to add or no? Well, my last question to close the discussion before the Q&A. All of you, according to each of you, what are your forecasts for the coming months regarding this phenomenon? What are the major achievements that we can expect in the RWA?
I mean, I think it's already starting. You can see that, with the BlackRock tokenized fund, I mean, it's going to be big players, much bigger than us for certainly, coming into this market because they can see the benefits, they can see the potential of blockchain, they can see the potential in the markets, and there's a big incentive to make money. So I think you'll see big players coming in, and obviously the Bitcoin ETFs had a big impact on them, and the success of those ETFs is really going to drive the institutions into the market. At the same time, I think you'll see projects like our project, which is going to really expand and sort of push the envelope with the types of products. So I think the big players are going to come in with fairly vanilla products, and so it's going to be up to us to find the more interesting and the more niche kind of products for the market.
I see a lot of activity as well. I think we are at the moment where banks and large asset managers are stopping to try to build and wants really to bring back the business, not just the innovation, but really the business and do concrete things. So now we have as clients or in discussions the top 20 of the asset managers. They are all working concretely on this type of projects. BlackRock was very helpful indeed to announce tokenization is the future. So of course now everybody is rushing. So this will be a real trend. Institutions going in this market and tokenizing a lot of things. I'm not sure it's going to be very visible. Actually, billions are already tokenized. With our platform, our clients tokenize $30 billion of assets, or even more. We don't know exactly, to be honest. And if you check the repos, it's billions and billions as well. So, but we don't see all of that. What we'll probably see is all of the governance tokens for RWA, as you were mentioning at the beginning, or will explode. Chainlink is exploding because of the real world asset. Not sure why, but okay. So this is going to be a trend. Maybe you know the blockchain Floki, some kind of meme coin, billions anyway. They launched a few months ago some kind of token for RWA. Yeah, you already have, I think it's 100 million of market cap, something like this, maybe more now. So yeah, that's going to be the trend RWA, and then the real things on the other side. But
yeah, and for me, I think the decentralized finance is going for the Web3 industry is going for RWA through maybe decentralized finance with protocols working with RWA as collateral. It's a bit what we are doing, and I think this will be a very big trend for the next year or next 2 years. And I would bet on this part. Yeah.
We have 5-10 minutes for questions. So if you have any question for our experts.
Maybe a question for you, Luc. Enfin, 2 questions, in fact. Do your clients, institutional clients, prefer to tokenize on private networks or on a public blockchain? And maybe another one. Institutional in traditional finance, usually when they subscribe to an investment fund, they pay later. So it's by tokenizing this process, I imagine that you make them pay at the moment that they subscribe to. Isn't it frein for them to that?
Yeah, it's very frustrating, to be frank. For the first question, so for years, we were struggling to work with large financial institutions because they wanted to control their own blockchain, and they were using R3, Corda, etc. So it was kind of complicated, so we had to fight to convince. Now it's different. Now they all want to be EVM compatible because at least some kind of interoperability. Some of them are still a bit blocked with Hyperledger or some closed network, and they don't want to drop the whole thing yet. So more and more we see bridges between what they already started to build and the public blockchains. Now all of them want to go on public blockchains, but they don't know how to go with compliance and control, which is what we provide. But they are going definitely on public blockchains. There are still a few issues, especially in the US, because they cannot hold any crypto. So even paying the gas fees, even loading their wallet so they can pay a transaction is borderline. So there are still a few problems, but they all want to go on public blockchains now. So and also Polygon CDK and Avalanche Subnet, that kind of technology where you can start with a closed environment and open it step by step, and you don't need to worry too much about validators, etc. It's very helpful. So public blockchain is winning. That's what I see. Even if the future is probably a bit hybrid, especially for the cash leg or for specific transactions. About your second question, yes, we started 6 years ago with ICOs. So you were paying a smart contract, you are receiving your token. Nice. What we do today with large funds is that you don't pay a smart contract, you pay a wallet. We scan the blockchain, we have a full order management system off-chain, so you can control, you can do all of your check, and at some point you validate and everything is minted. So we had basically to ask our developers to make it less good at what we can do, to fit with the different processes for a fund. So you basically have 2 types of funds. You have closed-end funds where you have a subscription period, so you have a period to invest. So you aggregate all of the investment, and at the end, boom, you say, okay, that's my list of investors, and you mint. Sometimes they don't pay everything, so you do later on capital calls. So we also have some kind of management tool for capital calls, and most people don't pay yet in stable coins, so we manage all of that. And the other type is open-ended funds, where every day you can invest and redeem. So basically, you can give back your tokens to the issuer. And for this, usually you have a cutoff time. So you invest, and at 2 p.m., boom. If you invest after that, you invest for the next day. So meaning that when you invest, you don't even know what is the price. You will get the price defined at 2 p.m. So you have to do all of these things, which are normal processes in the fund industry. And step by step, we try to bring people really on chain, meaning paying with stable coins, and therefore we can do much more things much faster, and step by step make it better. But it will not be easy. For small funds, it's easy to improve. For large funds, it's complicated. Yesterday I was in Luxembourg at an event, and they were saying that in the US, they changed for some type of funds from T+2 to T+1. So the settlement takes 1 day, not 2 days. But in Europe, we are still at T+2. So it's going to create so much trouble. So if you say now it's T+3 seconds, everybody's lost. So we have to go step by step. So for some instruments it fits, for others it's more complicated, and that's why as well that fixed income and debt is probably a low-hanging fruit. You can automate much more things. For example, we have a project with trade finance with a big bank. I love that because it's they are securitizing invoices, so it's always the same. You always have the same parameters, and you can make it real time. Sorry for the long answer.
Luc, you said something about the future being a hybrid in terms of blockchain between public blockchains and private blockchains. Can you elaborate on that?
Yes, I think the issue we didn't fix is privacy. So I strongly believe that bringing things on chain brings transparency, and that brings a lot of benefits. But it's not that easy for asset managers. In traditional finance, they do their thing, and they know that their competitors will see what they've done a month later. If it's 3 seconds later, it changes a lot of things for them. And you have some transactions that you don't want people to see. If you bring the cash on chain and the securities on chain and all the transactions are on chain, you know everything that happens. For public market is fine. Anyway, the price is public. For private markets, like private equity, it's not really what people want. So probably there are some limits, and probably as well some, I don't know, if we start having a lot of liquidity, maybe it's not useful to have all transactions on chain. Like on centralized exchanges, you have the whole day happening, and at the end of the day, you record everything on chain, all of the transfer of ownerships. So we will see. But the key players like JP Morgan, Goldman Sachs, for the moment, they have their own chain. They're starting to realize that there are less people coming on their chain than what they expected. But probably they will do things for their clients on their blockchain, and then make bridges with public blockchains for other utilities like DeFi, etc.
You've talked about EVM, you've talked about wallet, necessity of wallet. You've talked about the fact that people in some condition could not have crypto in their wallet, so it's difficult to pay gas fee and so on. My question is, when ERC 4337, account abstraction, gas fee and so on?
That's super interesting, and actually it will solve a lot of things. And also banks will be very happy to be to pay your gas, and that everything goes through them when you use the blockchain. I'm not sure we want that, but that's why they're looking at it. In our system, we already have an on-chain identity system where you can link one or several wallets, and it identifies you. So actually, it's already some kind of account abstraction. Now we are changing it a bit to make it compliant with the standard. So I really think it's going there. We never put the token at the identity level. We always kept them at the wallet level to make sure users will see their tokens in their wallets. Otherwise, it's in a smart contract. They don't really know where. So I think it's going there definitely, but it needs a bit more tooling, I guess, to make sure that people can use account abstractions the right way. It changed a lot of things.
It's a question around data, because you spoke a lot about compliance around financial, so KYB, KYC, and so on. But sometimes you need some data from the assets to manipulate financials after. Is there some compliance on that, like KYD or something like that, we can trust?
Quick comment, and after I probably will let you. Indeed, you need to identify the investors on chain, and then you need to identify the asset properly. So what we try to do is to make sure that our customers and users enrich their tokens with data. Most of them are still using the API level because nobody wants to be the first to expose everything. But you also have an asset ID. So for each token, it comes as well with an on-chain identity. And you can say, this is my auditor, and he can sign this type of proof in my token, or he can add a document, or a lot of things, including the valuation, which is extremely important. If you don't know the value of the asset, nobody will trade on the secondary market because are you doing a good deal or not? So valuation is probably the main data we need. But then you have a lot of great use cases like the production of your farm.
I mean, this is a problem that we had been working on for a little while. And we came to a solution in 2022 where we have a verification agent. So much like in the TradFi markets, the assets are held in a special purpose vehicle for the securitizations. There's a trustee that has an ownership of that in case there would be a default or an insolvency. But there's also a verification agent. So the verification agent will check each of the assets coming into the SPV. They'll check the pricing of those assets. And then we create an NFT on our platform, which is linked to that specific asset held by the SPV. So the pool is a series of NFTs, asset by asset, and you can sort of see when they're supposed to come due. But the verification agent is there, in an off-chain way, verifying whatever that asset is, and then they validate that on-chain, and then the NFT is created. So that's the way the bigger pools do it on Centrifuge, but it is expensive, and it is a bit cumbersome, but that's the best thing we've been able to manage so far.
Yeah, just to conclude on this one, I think if you want to benefit from tokenization and from funds and going public on the blockchain, you need to put some financials. The condition is that you have to show that the financials or the data are real and there is something behind. Yeah, for sure, we don't need this third party that is within the investors and the company that is raising. We don't need someone to say, yes, there is something behind this token. We have to build trust, and I think putting all the data on chain is a way. But for sure, blockchain is not built for a lot of data, for the world's data to be on chain. This is not possible on public blockchain. So we have to figure out the best way to do it.